Hi, it's Lee and welcome to the Tesla Economist. Now, the market has priced in a bad Q3. Why? Because Elon said they will be shutting down the factories. And many people inferred this to mean that all factories would be shut down. The only specifics that were said was it would be an international shutdown, which is where I believe people inferred this from. Elon said on the Q2 earnings call that they expect Q3 production to be down a little bit because we've got some shutdowns for a lot of factory upgrades. So in Elon's defense, he did only say production down a little bit. And judging by these latest Chinese production figures, it really was just that, down a little bit. I believe that China did actually run out of Model 3 inventory though, so as a result, I think deliveries will also be down a little bit too. But remember, this is just for the Model 3 line, which is only about 1/3 of Shanghai anyway. Elon also said, so just probably a slight decrease in production in Q3 for sort of global factory upgrades. Again, just a slight decrease. This is not a major loss in production, just a slight decrease. It looks like the downtime it took to upgrade to a Model 3 Highland was absolutely amazing. I have to hand it to Tesla. The fact they transitioned over to this new refreshed Model 3 in such a short period of time with such minimal downtime is impressive. And this tends to be what Tesla do excel at, the manufacturing prowess. With the exception of the X and S refreshes, which didn't go anywhere near as well. In fact, Tesla is still only at 2/3 the run rate they were prior. And when Elon said global factory upgrades, that was unnecessary really. He could have just said Model 3 lines in Shanghai and Fremont. Instead, he basically said global shutdowns, and so many inferred that as all factories to be shut down, and it was enough bait for the shorts and FUD to hammer the stock, especially as it was particularly high at the time, and no more momentum coming to pump it due to nothing announced about the Cybertruck. And it got hammered from 300 to 215. That was savage. There was very little support. And like I was saying, there appears to be an air pocket between about 230 and 280 with little support or resistance, which makes it a trader's dream to manipulate. Anyway, it appears that we only did lose a very minimal number in production due to this Highland upgrade, and that was just at Shanghai. There's also Fremont, and I'm actually not entirely sure if they've even begun the shutdown there yet. I would guess that Tesla would fly over a lot of the crew from China who just did the upgrade in Shanghai. But either way, we should assume that it shouldn't result in much downtime. And remember, these days, one line in Fremont is hardly the make or break of the company. It would be great to see the Highland in Fremont and maybe the CEO of the company actually acknowledge that there's a massive Model 3 refresh, and we get the official EPA figures for the car, which I'm hoping will have hit 300 miles. If not, it will be very close. But over that 300-mile threshold will be a fantastic result on a 60 kilowatt-hour LFP cell. It shows again how good Tesla are at engineering when it comes to EVs. If Legacy were able to generate 300 miles from an LFP battery, then even they would have a chance in this industry. We still haven't even seen any stock movement due to the Highland, so maybe it is waiting for the Fremont version and Elon to actually talk about it. I can't believe how this stock behaves. It doesn't seem to care about fundamentals. Yet when Elon demos FSD12, the stock didn't move on that either. I try and work out and understand how Tesla is valued from the market's perspective, and it really doesn't make sense sometimes. Oh, and the fact Mexico doesn't look that promising didn't tank the stock either. That was what I was most bullish about at the start of this year, the fact that Tesla can ramp up vehicle production without 4680 cells. When I trade options, I don't go for fundamentals or these sorts of things. I barely even use technical analysis either. The number one way I based my trading on was on emotion. That feeling of when you're worried it will keep dropping after it's already dropped. Like when we just hit 215 recently. I actually did put an order in for an option, but the market opened too high the next day. And then the other feeling when it goes up so high, you think it's going to reach the moon and wish you bought so many more shares when it was lower. These are the times I try and sell my options. Now, when I say epic Q3, I was just using Elon's words that time he pumped the epic Q4 before he sold his stock. That turned out to not be so epic. What I really mean is that this Q3 will be epic compared to what the market is expecting and has priced in. and we will get the results in just a few weeks, and they will likely surprise everyone. I think deliveries are going to be fairly close to Q2, and production won't even be that far off either, in a similar ballpark at least. And we had a lot of people saying it would be under 400,000. Remember, we had 480,000 in Q2. That was a great result. I think we could be close to 450,000 still in Q3. It's not impossible that deliveries will be even higher than Q2. The market used to care about deliveries the most, more than production, and it likely still does, as it cares mostly about demand. Tesla have been cutting prices, so demand should still be there. Now that will all be felt in the financials. Margins will likely be lower in Q3 than Q2, more price cuts, getting rid of old inventory, not to mention factory downtime, which will be felt in COGS, or if not COGS, then in OPEX, in restructuring. It's all coming out of profits either way. The same happened with the S and X upgrades. They weren't felt in CapEx. But this wasn't a major downtime. Nonetheless, margins might be the lowest we've seen for some time. However, this has been priced in, and they probably won't be as low as the market was initially expecting. I don't see any other reason for profits to be any higher. Energy was meant to be the big saviour of the year, but hasn't really done anything that exciting, although we might see a new Megapack factory in China too. In fact, Q2 deployed less storage than Q1. Anyway, I don't think the market is expecting any miracles in the financials, so hopefully there isn't anything to disappoint. I think it will come down more to what Elon can spin in the earnings call. We need a Cybertruck update, 4680 update, Mexico update, possibly a Gen 3 update too, or talk of a new factory somehow. If no one else asks these questions, it just shows how moronic the market is. They seem high on Tesla hyperbole and are just excited for the company and the future and love the brand, product and CEO and can't see past that. I'm passionate about the actual business, where the growth will come, the strategy, the financials, the expansion, the profits. That's my angle and that's what I like to talk about. There are plenty of others out there talking about the future and just how amazing Tesla will be in 2030 when everyone uses robotaxis. So we have CPI coming up too. We'll have to see how that goes. Then possibly a Highland update in the US. Then these Q3 delivery numbers. I think the production numbers will be more important than deliveries for once, although deliveries will obviously still carry a bit of weight as the market still wants to know there is demand for Tesla in this economic environment. I think demand has been holding at these prices. Teslas are great cars and exceptional value. I mean, so good, it's almost as if more people should know about them somehow. If only there was a way to communicate to the masses about how exceptional a Tesla is. Q4 should be better than Q3, although there will possibly be downtime from Fremont upgrading the Highland if they don't do it this month, which is running out of time. But I think there are plenty of Model 3s in inventory in the US to cover that downtime, so deliveries likely won't be overly affected. There may be more downtime in Fremont than Shanghai though. Chinese manufacturing is simply next level. Then we might get a slight margin boost from the Highland sales, but remember, Model Y still sells so many more than the 3, so the Model Y update will be a much bigger deal. But that will be a much bigger shutdown. 4 factories to shut down there. My guess is in about 9 months' time still though. Anyway, hopefully the stock price keeps this general trajectory and we see it above 300 again soon enough. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.